If you're looking for a very easy and a simple way to get started with investing in the stock markets, then this video is for you, where I'll be talking about ETFs, what ETFs are and how do they work. Hey guys, welcome back to the channel. If you're new here, I am Pravek, and in this channel I talk about stock markets and personal finance in general. So if that is something that interests you, make sure to subscribe to the channel. And without further delay, let's get started with today's video. ETFs are a very popular and simple investment securities that you can think of when it comes to investing in the stock markets. So if you're a beginner looking to get started with investing in the stock markets, then ETFs is the perfect choice for you. ETF stands for exchange traded funds. It means that they can be traded on the stock exchange just like you would trade a normal stock. So ETFs have the characteristics of both mutual funds and stocks. Why is it so? It is because of the way ETFs are supposed to work. So like mutual funds, ETFs also pool money from investors so that they can be invested in a bunch of different stocks and a wide variety of other financial securities. And these ETFs are listed on the stock exchange and you can trade them just like you would trade a normal stock listed on the stock exchange. Unlike mutual funds, where you can trade mutual funds only once a day after the market closes, ETFs can be traded any number of times on a given day if the market is open. And also, they are more liquid compared to mutual funds. ETFs also come with a lot of diversification. Diversification is the process of reducing the risk that you are exposed to by not investing in just one particular asset or a security, but investing in a wide variety of stocks and securities so that the risk is minimized. ETFs will help us do just that. And if you have heard the term, do not put all your eggs in one basket, diversification is nothing but just that. Because ETFs pool money and invest in a wide variety of securities and assets, the risk involved in ETFs is very less. That is the reason why ETFs is the safest choice when it comes to investing in the stock markets for beginners. It comes with very less risk when compared to other investments generally. But one thing you need to keep in mind is that most of the ETFs are passively managed. That is, they try to track a broader index. But no matter how hard they try to be accurate in tracking an index, there will always going to be a lag, or there is always going to be a difference between the index and the ETF. This is referred to as a tracking error. Just like there are a variety of mutual funds and stocks, there are a wide variety of ETFs as well, each with different investment strategies and different investment objectives. Based upon the way they are managed, we can divide ETFs into two categories: passive ETFs and active ETFs. So passive ETFs, just like I've mentioned earlier, these are passively managed. That is, they try to replicate a broader index or at least a segment of it. They may also try to replicate or track a certain industry or a sector. And since these are not actively managed by people and usually track only an index or a sector or an industry, the cost required to manage these ETFs is very less. Hence, the expense ratio of the passive ETFs is very low. Active ETFs, on the other hand, are actively managed by a group of people. And sometimes their expense ratio can be very high, which in turn leads to lesser effective returns for the investors investing in these active ETFs. These ETFs are actively managed to reach a certain investment goal, usually to outperform a certain benchmark. So when we are talking about the underlying securities or assets that the ETF invests in, we have various categories like index ETFs, currency ETFs, bond ETFs, gold ETFs. In gold ETFs, you're not physically investing in the gold, but on its value. One thing to look when considering investing in the ETFs is their expense ratios. So like I said, most of the ETFs out there are passive ETFs where expense ratio is very less, like around 0.1% or 0.2%, because they are not actively managed by people. But when it comes to active ETFs, since these are actively managed by a group of people, their expense ratios can be quite high, like around 1 or 2%. Now this number might seem small to you, but when compounded over years, it will eat up your returns, giving you lesser returns when compared to that of passive ETFs. So it's better if you stick to passive ETFs and years. Investing in ETFs and growing your money takes a lot of time, so you need to be patient with it. When you want to invest in a specific company, you will need to research a lot about it, about the activities that the company is involved in, its previous performance, its financials, and the news pertaining to that company. But investing in ETFs will help you stay away from all of that research. You just need to research about the previous performance of the ETFs, preferably the last 3 years or the 5 years performance, the returns that they give, the expense ratios of those ETFs, and whether that ETF you are interested in is investing in certain sectors or industries that you wanted to. And that is it. That is all you have to research about ETFs. It's as simple as this. So investing in ETFs will help you stay away from all that research and actively managing the stocks. Also with ETFs, you now have the ability to own a fraction of stock. So based upon the price of the ETF and the underlying companies that the ETF is investing in, you can now own a fraction of the good and expensive stocks. And also if these companies roll out dividends, you are entitled to them as well. It's amazing, right? So well, with all these benefits and opportunities that ETFs provide, how do we get started with investing in ETFs? It's very simple. I've said in the beginning of the video that ETFs are just like stocks. So you need to have a brokerage account to get started with investing in ETFs. So in India, we have these brokers like Zerodha, Upstocks and Grow, just to give an example. So once you have the brokerage account, you can invest in these ETFs by going to their portal. So if you're finding all this content helpful and informative, make sure to hit the like button, as it helps me reach more people who might find this useful. Investment as a process is not as easy as ETFs make it to be. So I'll be covering a lot more investment topics in my upcoming videos. So make sure to subscribe to my channel and hit the bell icon so that you'll be notified when I upload my next videos. So yeah, that is it for this video. Thanks for watching it till the end. I hope you've liked it. So that is it. I'll see you next week, and until then, bye.